Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I'm Yatin Mota.
Yatin, it was a fairly range-bound day for the market, but in the second half, just about half an hour, 40 minutes, before market close, there was, news flow coming in. There was escalation, or there has been escalation in border tensions, because of which we saw fag and selling, and we saw the Nifty, succumb to the day's low. 140-point cut on the index. In fact, the fear gauge, the India VIX, jumped 13%, and we are very close to that 22 level. So yes, that's the kind of volatility that has that is there in the market today. All the sectors, mostly all of the sectors, saw selling pressure. In fact, there was a knee-jerk reaction in the money market as well. We saw bond yield spiking, and there was some bit of weakness when it comes to the rupee as well. Now let's understand what exactly has happened. In a calibrated and proportionate military response, the Indian Armed Forces this morning targeted air defense radars and systems at multiple locations inside Pakistan. Of course, this was in response, in the same domain and in the same intensity as Pakistan. How this situation evolves is something that we'll be watching out for. But what does this really mean? What will be the implications of this? Let me bring on board, the Bodhisattva Ganguly, who is the group consulting editor at Network 18. Bodhi, thanks a lot for joining in this evening. Given the current escalation, how likely is it now that the conflict could spiral into something of like a full-scale war? And what indicators should we watch out for to gauge whether both sides are preparing for further military engagement here on? Your thoughts?
Yeah, so it's difficult to say whether it'll slide into a full-scale war at this point. I don't think that will happen. If you're referring to, if by full-scale war, you're referring to, ground incursions or something like that by both sides. But having said that, by the very nature of conflicts is that they are unpredictable. Obviously, Pakistan did attempt a very big retaliatory action last night. It failed because it was neutralized by Indian air defense, by our air defense, as the press release from the Ministry of Defense points out. And then we have now launched a series of drone attacks on a number of cities, military targets, and an air defense system in Lahore has reportedly been neutralized. So it does mark a significant escalation. Again, if you look at the wording of the press release is very professional. It is saying that it's in the same domain and the same intensity of the Pakistani, response on Wednesday night or early Thursday morning. So that's very professional. It depends quite clearly on what Pakistan will do next, on whether they try a bigger response, whether they, if you remember, Pakistan has been shelling Poonch now, continuously since since Operation Sindoor. And, about 15 or 16 civilians have been killed, including children in Poonch. So it depends on whether Pakistan steps up its response, it resorts to more artillery shelling, it tries, air attacks, and so on and so forth. Because India has made it very clear today, the External Affairs Minister, Dr. Jaishankar, made it clear earlier today that while India does not want to escalate, any Pakistani attempt to escalate or to step up the intensity of the conflict will be met by a very firm response. So yes, this could go on for some days, and I think it largely depends on what Pakistan does. Again, no one can predict these things, but unlikely that it will step into ground incursions or a ground warfare as of now. But
right
in the dynamics of conflict, very difficult to predict.
Right. Bodhi sir, Yatin also joining in from the studios. A pleasure having you on the show. I would like to ask you, the kind of engagement, which has been done by Pakistan. The PIB release says that Pakistan attempted attacks on Amritsar, Kapurthala, Chandigarh, even, Gujarat's Bhuj was targeted, in this attack.
That's right, yeah.
Never ever have we seen, Pakistan or India really move beyond, POK. So this is not limited to Jammu and Kashmir. It is spreading to different cities. In fact, there are footages available, a lot of speculative, content on social media, which even says that Rawalpindi, as well as Lahore, the cities have also been targeted apart from military installations. Obviously, we don't know exactly what is the situation. But talking about escalation, since the capital markets are panicky, especially after the PIB release came in, we saw 100-point plus cut on the Nifty. Do you think the situation will be quite tense over the next 4-5 days, and what kind of escalation do you see possibly coming in from Pakistan or India? Do you think aerial attack or something like a drone warfare could be the next big trigger for the next 3-4 days?
Yeah, quite possible. I think the next 3-4 days will be tense. See, the Indian, the PIB press release talks about a very large number of locations in India: Avantipura, Srinagar, Jammu,
Yes.
Pathankot,
Yes.
Amritsar, Kapurthala, etc., and Bhuj, which is in Gujarat. Big cities also. It includes Chandigarh, Jalandhar, Ludhiana.
Yes.
While there is a lot of footage on social media talking about, as you mentioned, possible attacks on Rawalpindi and so on and so forth, the Indian statement only refers to an air defense system in Lahore being neutralized. Since last night,
Yes.
there has been again chatter on social media about drone attacks on Sialkot, but that hasn't been confirmed. The release refers only to Lahore. See, again, as I said, it depends on what the Pakistanis do next. I mean, if, for example, the Pakistani Air Force, because this appears to be drone attacks from Pakistan's
Yes.
side. So drone attacks, and it doesn't. I mean, the Indian release doesn't talk about the details of what was done, but I presume it will be drone attacks, possibly missile attacks. So those were neutralized. Pakistani Air Force gets into that again creates its own sort of set of dynamics. So, I mean, I think the markets, as you said, did for the first time reacted adversely to the ongoing developments in the last hour, and the VIX, the fear index, certainly rose. I think this will continue for the next 3 or 4 days. But having said that, I think India, possibly the positive side. I mean, India, there has been an attempt by the government, if one could look somewhat into the medium term and look through this, there has been an attempt by the government to create an Indian defense industrial complex, and a lot of Indian private sector companies have been getting into manufacturing of various weapon systems, right? I mean, from artillery to and so on and so forth. And I'm not sure. I think it's the Indian government, the statement doesn't refer, but India is developing a capability in drone warfare, which perhaps you could see companies which are into Indian defense production. I don't know. There are some big private sector companies beyond the PSUs also, and then there are a lot of startups which is doing, from what I understand, quite innovative stuff when it comes to drones and so on and so forth. And I think India will double down on that over the medium term and long term, and even the short term. And I think so these companies, so there could be, if they are listed, they could see a rise depending on what kind of capability. It's very clear. I think we've used, again, depending on social media chatter, we've used possibly Israeli drones. There was, and I think on the first day of Operation Sindoor, we used Polish drones. But I think there are also Indian drone manufacturers and so on and so forth. So it certainly helps, and the experience will certainly help. The thing here is obviously the Indian government will try to indigenize, will try to build local capabilities, whether it comes to India has considerable capabilities when it comes to ballistic missiles of various ranges. That has been there for years, but the drone capability is being built up. So it will certainly help, strengthen India's indigenous defense sector, not just the large private sector companies such as L&T and Bharat Forge, and to some extent Tata's, which have been in Mahindra, which have been into this, apart from the public sector makers, but also a lot of, if one put it, startup type companies, which do stuff like drones and so on, both the hardware and the software. So it'll certainly help the Indian defense industrial complex, and I'm using the words in a good sense here, not a bad sense. or a pejorative sense, to be strengthened. But the point is, but certainly I think you will see a volatile period through certainly tomorrow and into next week. As I said yesterday, I don't expect this to last very long. You know, particularly because I think Pakistan's capability of continuing this clash beyond a number of days is quite limited. It also, quite frankly, depends on how other parts such as the US and so on intervene. And I think they're talking to both parties. The US has called for a de-escalation. So let's see how it goes. Right now, in the short term, it depends on whether there's any further Pakistani actions. And because if there are Pakistani actions, the government is made very clear that there will be a strong counteraction from our side. So markets could expect some volatility.
With that, we'd like to thank you for taking our time. We can expect volatility in the short term. With that, Bodhi, thanks a lot for taking our time and sharing your thoughts with us. And we will be connecting with you, on and off as and when there are more developments on this front. On that note, let me also bring on board Kunal Shah, Associate Fund Manager at Carnelian Capital. Kunal, thanks a lot for joining in this evening. Do you think the markets were underestimating the scale of escalation that we are witnessing right now? Because we did see a knee-jerk reaction, once the news came by. How are you looking at this development, and what are your thoughts as to what happens to the market here on?
Thank you for having me on the show. Till yesterday, it was looking like, while we were all nervous, and that was there in the markets as well, but it was looking like, it's not going to be escalating to the place where we are today. And we saw after the press release a sudden drop in the market in the last half an hour, right? So certainly, markets were nervous, but they were not expecting the kind of retaliation that has happened. So, that was the take from the markets. But otherwise, I believe volatility will be there whenever there is uncertainty. We have already seen that umpteen number of times in the recent past. So this will continue for a while and keep the markets under check, from moving ahead from here on. So, that's the 2 cents on the volatility part.
And what is the kind of strategy one should adopt to navigate these volatile times? At Carnelian, what is your strategy now?
To stay put is the best strategy, but at the same time, incremental deployment has to be spread out, because this volatility will give enough opportunity to steady and slowly deploy the money. Structurally, nothing changes for India, from 3 to 5 year perspective. Nothing changes in a lot of companies, irrespective of whatever is happening presently. Right. Even we have seen on the tariff parts, right, we have already cracked the deal with the UK government as well, right? So structurally, 3 to 5 year, nothing changes meaningfully. In fact, if at all, it further puts up India on a very strong footing. So the best thing is to stay put in this kind of markets, right? Not to think much of from a short-term perspective. Maybe, not to get carried away by the volatility and miss the bigger picture. That is what we are doing at Carnelian, asking our investors to look beyond the volatility. Nothing changes structurally for India, for sure, from 3 to 5 year perspective, or even for that matter, 1 year out from now.
Right. Kunal, hi. Yatin also joining in from the studios in the conversation. Talking about the perspective, Q4 result season hasn't been great. Obviously, there was earlier in the start of the quarter noise on trade wars ever since Trump has assumed office. Then comes the India-Pakistan conflict. Earnings season haven't been great, so far. In fact, people are now looking at downgrades for FY26 earnings estimates. In terms of Q4 earnings, in terms of what sectors look like, would you continue to like defense stocks, banking stocks, pharma stocks, which are probably insulated from all of these news or probably benefit as such, or would you rather focus on high beta names or probably concentrate your portfolio on mid caps over correction?
Sure. So I think, as you highlighted, the result seasons have been a mixed bag. I would not say that completely they have been wet. There have been pockets where the numbers have been good. So banking is something which we believe should kind of continue to do good, except for PSU banks where they are seeing a little bit of NIMS pressure, largely on the corporate side. Otherwise, the GNPA numbers, etc., look on a very strong footing for a few private banks. NBFCs should do good with the interest rate cut and improving liquidity. And more so on the domestic front, there's been a lot that is happening. So that should continue to do well. I think the uncertainty revolving around the export markets on account of tariffs, etc., does continue and it will continue for a while. But net over there also, with the we've seen textile sector opening up big time because of the treaty FTA that we have signed with the UK yesterday, right? So there are pockets of opportunities in these spaces like textiles, engineering, capital goods, a few certain auto anchors, etc., where they remain insulated from whatever is happening in the global markets, right? Which give us a good opportunity to kind of invest from 3 to 5 year perspective and have decent, money making opportunity.
Sure, Kunal, thus far we've seen FIIs, maintaining their faith or keeping their faith in the Indian market despite simmering tensions between India and Pakistan. There are other tailwinds that have emerged, right? Of course, it's the UK FTA. Then crude has also emerged as a tailwind. It fell below that $60 per barrel mark, and global brokerages have also slashed their target price where Brent is concerned. So, if one were to look at some crude-related themes now, which ones would you look at? And also the fact that rate cut in the Indian context, we are in the middle of the rate cut cycle, which is, I think, one more reason why FIs are staying put when it comes to the Indian market. Within the rate sensitive basket, aside of private banks, which are the pockets you would look at?
So I think we have already seen a good rally in OMCs because of what has happened to the crude, right? There are certain niche sectors again like tires, etc., which would be a beneficiary because of the crude coming down and derivatives of crude coming down. So that pockets also should kind of continue to do good. There are other lot of consumers, and there are a lot of other consumers of crude related derivatives in chemicals, which also will see a benefit playing out in Q1 and Q2, which should also kind of do good for the next financial year, right? So structurally also crude coming down helps India because of the current account deficit, right? So that augurs well for certain pockets of companies and sectors which I mentioned, other than the likes of OMCs. What was the second question?
Second question was on the rate cut cycle. We are in the middle of a rate cut cycle where India is concerned, even though the Fed has hit the pause button. If you were to look at the rate sensitives right now, barring banks, would you choose realty? Would you look at auto? Which are the other pockets that would catch your interest now?
I think two-wheelers is a space which still looks interesting in the auto and auto space, and which would be a beneficiary of the rate cuts also. At the same time, sectors, certain pockets in PV space which have new launches lined up, right, also would be a beneficiary and which should do good. And we've seen them coming out with good numbers also. Having exposure to farm related or rural economy also is the sector which will kind of do good and be a beneficiary of the rate cuts, as and when that happens in the near future.
Sure, that's the view then, Kunal. I would like to thank you for taking our time and joining us this afternoon and sharing your thoughts with us. Look forward to more interactions with you going forward as well. Well, on that note, of course, we've come to the end of closing bell. We saw 1,000-point cut on the Nifty mid-cap index, Yatin. Yes. Yesterday, the mid-cap index was outperforming. It managed to
gain 500 points.
Yeah, gain 500 points. And today, of course, in a knee-jerk reaction to the escalation in tensions between India and Pakistan, we saw, the markets taking a hit, the mid-cap taking a sharper knock. But of course, as Bodhi was also mentioning, and so was Kunal, that the situation will be fluid, it will be volatile in the short term. Perhaps it will be prudent to stay put and let the situation, play out and then, take a call. But with that, completely timed out on this edition of Closing Bell. Thanks a lot for tuning in. Stay tuned to Money Control For all the latest news and updates, we'll catch you tomorrow morning with the markets at 9 a.m.